You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. Once again, time to unleash the options educational beast known as Options Bootcamp. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever compelling, ever fascinating, ever evolving Options Insider Radio Network, upon which so many of you folks are binging these days. We're kind of like the options market overall. Every month, a new record. That's kind of what's going on out there. You guys are driving up my bandwidth bills, but I like you. I like you all out there. So keep listening. Of course, if you're on the on-demand side, one of our legion of on-demand listeners, make sure that you've upgraded to the full network. So you're getting all of our shows, not just Options Bootcamp. Otherwise, you're missing out on a heck of a lot of content. And then B, of course, if you like what you hear, keep rating and reviewing. Just like our friend this week did looks like iTunes. And, we have reviews going back over a decade, listeners on this show. Sometimes it's fun to go back into the archives and see what those reviews are like. This one comes actually, I believe they pulled this one from 2014. 2014, this is Alan TPA, or Alan Tapa. He says, very educational. A great show, very educational and easy to understand. Keep up the good work. Well, thank you, Alan. All the way back in 2014, and for everybody who takes the time to rate and review us these days. Of course, if you want to go above and beyond, you want to get not just the nearly dozen or so programs on the network coming at you every week, but also you want to go for some great pro Q&As. We had none other than Mr. Tony Saliba in the hot seat answering your questions yesterday. Every Friday, of course, Options Oddities. You get, of course, live access to everything we do here on the network, the great community we have. You can talk to each other there, as well as, of course, awesome giveaways like our Pro Trading Crate. Give those away every month. And those are no small amount of effort and expense for us to put those together, listeners, but they are very fun. So where do you go to qualify and get access to all that cool stuff? Theoptionsinsider.com/pro is the place to go. And joining me on the Options Bootcamp Drill Instructor Proving Ground, once again, my fellow Harvard alumnus, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, how go things, sir? Did you enjoy our time in the Harvard Yard last week, sir?
Oh, yeah, that was a blast, man. That was super fun. And, I'd like to do it again. Too bad we couldn't do it in person, though. That would have been great.
That was the plan initially. Dan and I were going to head over to New York and speak to a Harvard Business School alumni. Alas, we had to do it virtually, which logistically is easier, but then I don't get to give Dan a hard time in person, which is always fun. But fun stuff nonetheless. That's actually available now for all of our pro listeners on the pro side. If you want to go check out that conversation we had, it was myself and Dan, JJ Kinahan, formerly from TD Ameritrade, now from IG, and a few others answering all these questions from these Harvard Business School alums. You can find that on the optionsinsider.com/pro. So one of the many benefits of signing up over there as we keep on rolling. It is time to tackle all comers. It is time for the mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the Mail Call, the portion of the show where you folks take the reins, your questions, your comments, your insights, your pearls of wisdom. And we like to kick things off when we do these dedicated Mail Call episodes with the patented, the infamous, the now legendary Dan Passarelli question of the week from Market Taker Mentoring. But even before we do that, Mr. Dan, last week we did a whole show specifically devoted to your trader survey and some of the fascinating results. You've had an extra week now to kind of mull that over. So before we even get to your question of the week, are there any other interesting nuggets or takeaways that you found there that you forgot to share last week that you want to highlight with our folks? Now is the time. And then B, what is your infamous Passarelli/MTM question of the week?
Well, let me start first with the question of the week. So somebody was just asking me about this. Oh, when the heck was it? I don't know. Pretty recently, within the last couple of days. So what is the most important option strategy? And somebody phrased it that way. Like usually I'll get, hey, what is the best option strategy? You know, and I always feel like that's kind of a funny question. What's the best option strategy? Because, you know, each of them are, they each serve their own purpose, you know? And so in that regard, because each serves its own purpose, like there's not one that's the best. But as far as which is what I would call the most important, I do have an answer to that one. I would say that there are probably, no, not probably. I know for a fact that there are certainly two strategies that are undeniably the most important in option trading. Those are credit spreads and time spreads.
I thought you could say boxes and covered strangles.
Oh, you know what? I traded a box for like the first time in a decade.
Recently?
Yeah. Like last week.
Oh, that might be a fun discussion topic as well. Why did Dan trade a box?
Yeah, I've got a reason for that. But yeah, you know, the reason why those are the most important strategies is because if you truly master credit spreads and time spreads, you can pretty much trade anything, because just about every other strategy is comprised of one or both of those. So yeah, so that is my answer to that one. Now, as far as my survey results, I don't think that we talked about this last week, Mark. One of my questions on there was, why do you trade? Which, you know, might seem like a funny question at first until you really start thinking about it. Because I don't see that anybody answered, you know, to get rich, to buy a Ferrari. Like nobody answered that, because that's not really your answer, right? Like the answer is always somewhat deeper. We had 39% say to invest for retirement. 18% said the thrill of winning trades. 46.2% said I enjoy the mental challenge. And then as far as we had some miscellaneous sort of categories, I manage family trust. It's a hobby, learning a new skill, and to get that educational knowledge. A freedom was one. Additional income as a supplement, right? Hoping to figure out, again, with that mental challenge, grow my IRA, again, for retirement. So, you know, I just really thought that was very interesting and telling. Yeah, I really thought that was very interesting and telling.
Speaking of interesting and telling, I think our live chat is looking. They want to know, and I want to know as well, Dan. I'm curious now. You have piqued my curiosity. Why did you trade a box last week? Walk us through this mad scenario. What madness afflicted you to want to trade a box and retail account?
So this week I'm doing my earnings class, my live earnings trading sessions where I trade live in front of people, and I vowed to use less than $10,000 of my account. And so I looked around at the different accounts I have, and got one. I didn't have to dust it off or anything, but it actually has under $25,000, which is the day trading limit. And I put on a credit spread, and I needed to trade out of it that same day. And I was like, well, I'm not allowed to take this off because there's less than $25,000 in this account. And, they put you in trader jail if you day trade, right? Close the same trade that you open the same day. So I was like, crap, well, how can I take this off? Oh, wait, I know, I can trade a box. Because a box is just like synthetically closing the, a credit spread or a debit spread. So, had to get a little bit creative, had to put on the old thinking cap. But there's a good lesson for folks out there who maybe find themselves in that same situation.
That makes more sense. You legged into it. So I was like, why would you just go out and put on a box willy-nilly right now?
Yeah.
Interesting. All right, that makes some sense. Kind of a fun. We've talked about these types of spreads in the long 10-plus year history of the show, listeners. If you're not familiar with boxes and what those are, go back, look at some of our more income and those interest type trades, and boxes will be in there. Again, not the most frequent topic. I think they came on our radar. There was a resurgence in them a year or two ago. And we talked about that, I do believe, on this show. I know the rest of the network we did somewhere. So many shows, sometimes it's hard to keep track. But intriguing stuff out there. Check it out if you don't know what a box is, listeners. If you want to know more, if there's interest, hit us up. Maybe we'll see if we can devote some future episodes to the majesty and the madness of boxes. Speaking of majesty and madness, it's what we always get in equal measure when you folks answer our questions of the week. Let's pay off last week's question first. Last week we asked you, recession, usually defined as 2 quarters of negative GDP growth. It seemed like everyone was skittish to actually pronounce this a recession. So we thought we'd put the question to you folks, make you folks the ultimate arbiter. Are we in a recession or not? Heck yes, heck no, or we need a new definition. And Dan, 75.9% chose heck yes. 17.2% said we need a new definition, which kind of hard to argue with that because no one seems to agree on this one. And then 6.9% say no. Dan, do those numbers come as a surprise to you, or is that what you expected from our very savvy audience?
No, I think that our audience, being savvy as they are from putting in the time and the effort to make the decision to get better with their trading by educating themselves, I think they've heard us talk about these sort of things. And hey, as much as I want a robust economy, as much, if not more than the next guy or gal, by the classic definition, we're in a recession for whatever implications that have. But I would say you can't just go and change definitions. I mean, it's silly,
There's a reason why they call it the dismal science, sir. It's a science until you don't want it to be, or until it's inconvenient. And those rules somehow change and the definitions start to change. So interesting stuff, but 76% of you almost agreeing that we are in the recession, ringing the old R word. This week, Mr. Dan, we're diving back into a topic we just talked about on the show just recently with Mr. Matt from ORATS, the keeper of all of our great earnings data. If you missed that episode, listeners, go check it out. The definitive guide to trading options during earnings, because we actually have the data. We have the answers for you. And you guys, of course, can always check out the latest editions of those reports over there for free at our website, theoptionsinsider.com. Click on the Options News and Articles tab, and you'll see the earnings season, earnings move results, and earnings trades reports for all that great data. But Dan, when we ran the numbers, since the start of the pandemic, earnings seasons have averaged out at about 85%. What does that mean? That means if you took the price of all the straddles at the outset of the season and added them all up. And if every name moved exactly as much as their straddle, that would be 100%. Everything moved pretty much exactly as much as was baked in. What we've been seeing since the pandemic is they've been moving less. Somewhere around 85% of how much movement was priced in was actually delivered in these names. And so we thought we'd put the question to you folks. What do you guys expect for this coming earnings season? Because we are in it right now, listeners. It is hot and explosive and action-packed out there on the earnings front right now. Big names popping off like Tesla, Apple coming up, all sorts of big names. So we asked our folks this week, what do you expect? It's somewhere around the 85 to 90% range, so somewhere in the ballpark of where we are right now? Or you're expecting maybe an action-packed earnings season, so somewhere north of 100%, so getting more movement, more bang for our buck than was priced in at the outset of the season? Or you're going to go the other way and say it's going to be a pretty boring season, only about 80% or even less than 80% of the juice that was priced in will actually be delivered. Mr. Dan, what is your thought, and what do you think our audience is voting for?
Well, I mean, I would like to just point out an obvious error here in, a syntax error, I guess, if you will here, Mark. I would say that if the movement that is priced in is, if earnings season only delivers less than 80% of the movement priced into the straddles, I would say that's pretty freaking exciting. I don't think that's boring.
I guess if you're blasting away at a lot of premium, that could make your day. Yeah.
Yeah. I mean, that's like 90% of what we do with our earnings trades is very strategically sell front expiration premium. And man, there's nothing I love more than overpriced options. I think I might just print up a t-shirt that says that.
So you're choosing the less than 80% pretty boring, sure, just solely on the basis of syntax.
Exactly, because it's not boring. It's gosh darn exciting.
Dan takes umbrage with our third choice in our poll. You think our audience is taking the same umbrage, sir?
I sure hope so.
Well, let's see. Right now, our audience is kind of mixed. So it shows us a contentious poll. Almost 43%, 42.9% saying it's going to be about the same, somewhere between 85 to 90%. Then we have a tie for second place, Dan. A weirdly specific tie, 28.6% each for north of 100%, so super action-packed, and also below 80%, which, as we all know, has been definitively described as pretty boring. So, Dan, our audience, you are tied for second with our audience in our poll. Listeners, get out there to @options on Twitter. You could usually find our polls somewhere near the top of our feed. Obviously, we put a lot of content throughout the week. If you can't find it, scroll down a little bit. We try to retweet it throughout the week so it stays somewhere throughout the top so you guys can access it. But scroll down a little bit if you find us over there at Options. You should be following us anyway. We put a lot of great content and a lot of great shows, obviously, throughout the week. At least we tend to think so. But make your voice heard if you disagree with that one. Speaking of making your voice heard, let's go out to DC. DC wants to know, hello, boot camp. Well, hello, DC. He says, or perhaps she says, just wondering what Mr. Dan is up to in the market right now for the longer term investments. Is he in cash or fully invested in this market? So Mr. Dan, sounds like DC wants to know, not for like the rating and the narrow data stuff, but more of what you term kind of the investment capital. Are you all in, or are you kind of hanging out on the sidelines waiting to pick your moment?
Oh, I mean, honestly, I am mostly in, which is mostly because I didn't get out at the top. And I just think at this point, I'm sitting here waiting it out, at least until, if we get more of a rally where I get an opportunity to either buy some puts or maybe write some at the money overpriced covered calls to hope to get assigned and just get out of it, I might do that. But right now I am mostly invested, and in the long run, which is what we're talking about, I think it's going to be okay.
All right, let's get out to Jake S. He's been waiting patiently for his answer. He says, hi, I'm a big fan of the podcast. Well, right back at you, Jake S. Dan and I, huge fans of yours. And he says, I have an options question and wanted to run it by you. I was assigned on some put options that I sold. Since the assignment, they are down 40 to 50%. Well, I'm sorry to hear that, Jake. Yes. I think by they are down, I think you mean the stock. Obviously, you got the stock put to you, and the stock has continued to go down. He says, to try and recoup some money over time, am I best to sell calls against this stock, to sell call spreads, or a ratio call spread? I think longer term, these are good holdings, so I like to work closer to my cost basis on these. Thanks, Jacob. Well, this is an unfortunate situation. You can take solace in the fact, Jacob, that you are, or Jake, I should say, that you are not alone. A lot of people are down money. Look at if you just bought and hold the index this year, you're down probably 20% already. So it's a rough year for a lot of people. So you're not alone in that, for whatever solace that could give you out there. Now, this is a very frequent question. In fact, we touched on this back on the episode we did not too long ago, Jake, on the repair spread, the ratio repair spread. So the first thing I would have you say is, do you honestly think these are still good long-term holdings? If you do, I mean, sometimes we could be colored by our investment, right? You sell puts in the name, you think that's a pretty good place to buy the stock. And then something changes with the stock. It gets cut in half as your stock did. And now you're owning this stock at a much lower level than you initially anticipated. Are you now saying it's a good long-term buy? Because, you know, as some people like to do, once a stock turns against you, oh, now it's a long-term buy and hold. You know, you can't sell it. You can't take that hit. It's just a psychological barrier. So make sure you're honest with yourself that you honestly do think these are a good long-term hold. And if you do agree, then I encourage you to go back and listen to our episode on stock repair strategies. Your scenario you're talking about here is pretty much exactly what that trade was designed for. That is what you refer to as the ratio call spread. This time we're going to buy one. So in this case, let's say you're in XYZ, you sold a put at, let's say, 20 on the 20 strike in XYZ, right? Now it's dropped somewhere around 10. So now you're obviously wearing it on the stock. That's the problem. Again, listen to the ratio repair episode because they have to line up pretty well. And getting these spreads to line up can be kind of tricky. But what you're looking for is some sort of near at the money call, maybe slightly in the money, maybe slightly out of the money, depending on how you have to do it. You're going to buy that, and you're going to sell two now. You're going to go farther out. And probably in our example, you're probably going to sell them maybe somewhere around the 15 strike. So it doesn't have to get all the way back to your 20 strike to break even. You want to ideally make it so that you could break even at a lower, more realistic stock price. Then you're going to sell two calls there. And what does that do for you now? You have the stock. So the first thing you want to do is make sure you're not adding to your investment in a trade that's already gone against you. You don't want to do that. So you want to make sure that ratio spread you're putting on is at the very least for no outlay, hopefully maybe even a bit of a credit. And then now what happens if the stock continues to drop? You haven't cost yourself anything additional. But if the stock does rally and starts getting closer to that strike you sold two of, now guess what? You got the stock making money and you have that long call making money. And if you get to that strike where you sold two of the calls, now you can be happy having that stock get called away and know that you've effectively broken even on that trade at a much lower, much more feasible price. So I think if you agree with that outlook, the ratio repair strategy should be something you should consider. But Mr. Dan, what are your thoughts here? Jake's kind of wearing it on some puts that he sold. The stock has continued to sell off. He wants to know, should he do the repair strategy? Should he try to just sell the call or call spreads? What do you think he should do?
You know, Jake, from State Farm.
That's definitely who this is. It is definitely Jake from State Farm.
I know it is. I know. You don't have to tell me. So, Jake from State Farm, here's what I think. And this might be some tough love. I think you're lying to us. I think you're lying to us right now. I can tell. I know these things.
You can spot a liar.
I can spot a liar. I can pick it out. Your body language gives you away. Oh, wait, you're not here in front of us. No, here's what I think. So when I sell puts, I literally want to get assigned. All right. Now, some people will say, you know, hey, look, if you sell puts, you should be okay getting assigned. And then a lot of folks will tell themselves, I'm okay if I get assigned. But now the stock's down 40 to 50%. I don't think that you were okay when you got assigned. I think you were probably pissed off, right? And I know you're more pissed off right now. I think you did not want to get assigned. And so I'm questioning, and maybe I'm wrong, and I hope I'm wrong. but you're saying, I think longer term, these are good holdings. Now, is that actually true, or do you just want to make your money back, right? Like, are you hoping and praying, or are you logically forecasting, right? And it's really important to know that difference. Like, the hardest thing about trading is that it's not man versus market, it's man versus himself. It's the psychological aspect of it. It's knowing what you really think. And man, like it sounds like, of course I know what I think, but no, like there's a whole bunch of science involved that says that like you don't necessarily know what you actually think or what, your body's doing. In fact, there was this study by a guy wrote an interesting book called The Hour Between Dog and Wolf, where he was a trader who became a neuroscientist who basically wired up all these traders on a trading floor. And at the end of the day said, hey, do you feel like today was a stressful day? And they would give an answer, but their body chemistry, their cortisol levels and their adrenaline levels and, all the stuff that goes along with what represents stress did not always match their answers. Right. And it's difficult to really strip away all the emotion and all the other things that cloud your judgment. And so if you really just basically pretend you don't have that stock on and ask yourself, at this current market price, would I buy the stock? Is it actually a good buy? And then if it is, I love using that stock repair strategy. That sounds like a perfect idea. But if you look at it and you're like, geez Louise, this thing's down below the 200-day moving average. It's like headed to zero. Oh, geez, I wouldn't touch this. And then you remember, oh, yeah, I have this on. Then you got no business holding on to it. And the stock repair strategy or any other strategy ain't going to help.
Yeah, that's why I started with are you sure you really think this is a long-term hold? Because that's always my first question on these as well. Whenever you get run over, what happens, Dan? Oh, now it's a long-term buy and hold, right? So if you're being truthful with us and with yourself, Jake, then that can work for you. But if you dig deep, make sure you are being truthful out there. All right, we'll get out of here on this just fun, silly little comment from one of our pro listeners, Mr. Age of Del Aquarius. He was just, I guess, having some fun last week, saying, sell puts and snap and collect that juicy premium. Glad I don't take my options advice from Reddit. Yeah, there's a danger to looking at the online crowd and listening to what they have to say out there, because they will get you into some trouble off. And that, of course, last week's Snap listeners took it on the chin with huge sell-off, 30% plus after their earnings. They have rebounded a little bit since. But yes, I get what you're putting down here, Age. Listen to folks who have been doing it for a while, at the very least. That usually will help improve the odds for you in the long run. All right, Mr. Dan, that music means we've come up against it for another episode here of good old Options Boot Camp goodness. But before we go, if the folks want to reach out to you, maybe they believe what Jake is saying. They're buying what Jake from State Farm is putting down, and they want to take the other side with you. They say nay. Where should they go? What should they do, sir?
Well, folks, I always say you can make your way on over to markettaker.com. But, if you're listening to this live, we actually have a webinar tonight. Tonight at, I want to say it's 6 Central Time, 7 Eastern. And it's all on credit spread trading. I've got this really awesome system for trading credit spreads. And if you want to learn about it and look at how to move forward with it, just go to markettaker.com/insider. Market as in stock market, taker as in take what is rightfully yours, 2 T's in a row. Markettaker.com/insider. And I'll see you tonight on the webinar.
There you go, Market Taker. Don't forget the second T.com. Go to /insider to get access to that webinar and all the other cool stuff he's got going on over there. Speaking of cool stuff, a lot of cool stuff coming to the network. Options Playbook Radio hitting the network a little bit later today. That'll be on the on-demand side out there. Tomorrow, of course, all the goodness that is the option block and This Week in Futures. Options Friday, volatility views, and for all of our pro folks, coming back at you with options oddities and a whole new week next week, kicking it off with the option block and the crypto rundown on Monday. Tuesday, another great pro Q&A session exclusively for our pro members, all the way through to another Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.